Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello and welcome back to the podcast, or welcome if it's your first time. Thank you very much for being here. Today we are going to talk about being your own banker. What does that mean? After all of these podcasts, after all of these things in the book, and if we've read Nelson's book, what in the world does that actually mean? I have had the question posed to me. Mary Jo, I've listened to a lot of your podcasts. I've listened to your book a couple times, and I still don't understand what the whole thing is about me being the banker when I still have to pay interest. And you know what? It's a great question because not always does everybody get it right away. If we are so stuck in our mindset of what we grew up with and stuck in our mindset of using cash, we are not going to understand that question because we're not always going to be listening because we just don't quite understand what in the heck is she talking about. So that's what we're going to talk about today. Are you ready? Okay, but before we go, share with your friends, leave reviews, whatever it is you need to do. I appreciate it. And before we get too far into it, the Life Without the Bank book is online and ready to be purchased. You can get it at farmingwithoutthebank.com or you can get it at withoutthebank.com. Wherever you want to go, it will work and you can get it for $5.99 for the introductory price. So go get it now. Okay, what am I talking about? You're going to be your own banker, but yet you pay interest. Paying interest to the insurance company or paying interest to the bank is not what we are talking about when we talk about you being the banker. When I talk about you being the banker, I mean you're in control. You're in control of that loan. You're in control of the payback terms. You're in control of being able to borrow money. Nobody's going to tell you no. Nobody's going to tell you when you have to pay it back. Nobody's going to tell you what you can buy. You are in control. And really, I should say that's one piece of it. You are going to pay interest to the insurance company, or you're going to pay interest to the bank, or you're going to lose interest that you could have otherwise earned. So being the banker, when we look at what Nelson is teaching for the infinite banking concept, it's you being in control, you making those decisions. And then we go to you being an honest banker, which means if you're borrowing money, you pay it back plus interest. You pay it back plus interest. How many people using cash are never paying back their savings account, much less paying it back with interest? Put it on your books like a loan. This particular individual that asked me this, he's buying cows with cash, but never paying himself back, never putting that loan on the farm books to say, I have a loan. He's buying equipment with cash. He's doing all sorts of things with cash. He has very few loans. He's getting a huge tax return. And he said, well, we were going to pay off debt with it. Okay, we need to think like a banker, right? If you're going to pay off the bank and then you want to grow your herd of cattle, and then you have to go back to the bank and borrow the very money that you gave them to pay off debt. You now have to borrow it back again to buy more cattle. So you created more debt. Being the banker means we have liquidity of money. We have our pool of money. The other piece of this is that if you borrow money from the bank, who gets the profit that the bank made? The profit goes to the shareholders of the bank. When you are part owner of a mutual life insurance company, which happens when you own a policy, you become part owner of that company. So now when the company makes money, who gets the profits? You do, in the form of a dividend. Those dividends are huge. We've talked about this in previous podcasts when we talked about the twin sister example in Nelson's book. The reason why a life insurance policy will outperform a CD is because of the dividends, which are a share of profit. That's a big deal. We want to own the bank. We want to be the banker, so we're in control of that money. We're in control of the payback terms. And the question I get all the time is, I don't understand paying myself back more. Why would I do that? Well, let's just say that you have $10,000 of cash value and you have a 5% loan. That means that you owe $500. But what happens if you have a 7% loan and you pay it back to yourself at 7%? Now you have $200 extra in interest. That $200 is the extra. Pay yourself back plus what the insurance company is charging you. If you were willing to pay 15% on a credit card, why aren't you willing to pay yourself back at 15%? If you're going to take cash and pay off a piece of equipment, that payments aren't done. You're done paying the bank, but now you have to pay yourself back for the cash you used. So if we're going to pay ourselves back plus interest, anything extra, in this example, the $200 is not going into the policy as a loan repayment. It's going in as a premium payment. And I know that I have talked about this before in previous podcasts, so go back and listen to some of those. This is all about you having control. When I say people don't understand the infinite banking concept when you're going to use a different agent, they don't understand the infinite banking concept. They can sell you life insurance, but they can't teach you how to be a banker. This is exactly what I'm talking about. This gentleman could have gotten sold life insurance from anybody. But what we talked about in our meeting was almost, I don't want to say earth-shattering, but it really challenged his paradigm. And he really was like, man, I have to try to get my head around this. Because this is not, it goes against everything that he knew. And again, he didn't really have good numbers because he wasn't really keeping his books clean. He had 2 different enterprises on the farm. Neither enterprise was broke out from one another. He had an off-the-farm job, which was most likely supporting everything, but no good books to show what was happening. If you're going to be the banker, you need to know the books. Because if you go to the bank, they're not lending money to you unless you know what's going on, right? They give you a really hard time. They want to make sure that you have the money to pay. Well, now you're the bank, so you better make sure that you have the money to pay. It doesn't mean that you can be lazy. It doesn't mean that it's a free ride. It just means that you better make sure you know your numbers. If you can't pay a loan back to your life insurance company, then you shouldn't have borrowed it from your life insurance in the first place. If you can't pay money back to your savings account, then you shouldn't have used the money in the first place. If we get into that mindset of being honest, we will always have money. It's when we're not honest that we're stealing from ourselves and we don't have that extra money. This is a conversation I talk about on a daily basis. But what does it really mean to be the banker was the question that I thought, well, if he doesn't know that and he's not quite getting it after listening to the books twice, then we're missing something. How many other people are not getting this piece of it? And I'm going to tell you, most are not getting this piece of it because they're going to go to an agent that doesn't know what they're doing. They're going to read the book and poo-poo it and set it on some cabinet and never do anything about it. They're going to scroll on by any ad that they see about it, or they're going to tell you that you're absolutely crazy for even listening to me, right? Because they're not going to get it. This cash mindset and going to the bank has been ingrained in us for so long that we have to try to break that paradigm in order to change what we're doing. So really, you can take this as a challenge and say, what am I doing with all of my money? We plugged his numbers in to the future value calculator with a $10,000 example. If he uses $10,000 of cash to buy something, he had lost opportunity cost on that money. He didn't have the accessibility to it to buy anything again. So if he paid $10,000 for cows, guess what? At the end of the day, when he passes away in 49 years, because he was only in his 30s, so when he passes away in 49 years, guess what? That $10,000 would have been $54,000 at 3.5% interest. If he could have put it somewhere to earn 3.5% interest, he could have $54,000. But instead, he paid $10,000 for, let's say he bought a piece of equipment. He paid $10,000 for that piece of equipment. The true cost of that piece of equipment was $54,000 because he didn't put it in the policy first. How much lost opportunity do you have if you're using cash? The banks understand that. So if you're the banker, you have liquidity, you have control. If you own the bank, you get the profits, you get a dividend. Where does a life insurance policy come in? Is it's the tool that allows us uninterrupted compound interest so we don't have the lost opportunity cost. We still have access to the $54,000 that we earn long-term over our lifetime, right? It gives us the liquidity. It gives us the control. It gives us the guaranteed uninterrupted compound interest. It's giving us access to all those things while we're building our operation. That's you being the banker, having the right tool, getting the profit, having liquidity and control. It's a big deal, my friends. It's a big deal that we are not taught to think about. I hope that that has helped others, because if there's one question, there's always more than one. So I hope that that has helped others who have maybe had that question, who are maybe stuck and saying, Mary Jo, I'm paying interest either way. You darn right you are. You're paying interest to the insurance company, you're paying interest to the bank. But when the insurance company makes a profit, you get the dividend, not the guy driving away from the bank in his Cadillac. Not that there's anything wrong with people driving Cadillacs. Good for them. If you guys have questions like this, please let me know. Email me at maryjo@withoutthebank.com and I would be happy to answer them, happy to do a podcast on them. So please let me know if you have any questions. If you have read the book, get on my schedule for an appointment before harvest, okay? Or harvest, oh heavens, before planting, which is when I'm recording. This is, March. So get on the list before planting. If you're listening before harvest, get on before harvest. Just get on the schedule so that we can help get you started. We can help figure out what's going on with your operation. I am happy to do that if you've read the book, if you've listened to the book. If you have not read Becoming Your Own Banker by R. Nelson Nash, you need to read that book because it clarifies what being the banker means. Read the book. It's super short. It's a pretty easy read. And you're going to understand why we want to be the banker, why we want to think like the banker. That's all I got, you guys. That's it. That's all for the day. I'm not going to beat this dead horse much longer. So let me know if you need anything. Let me know if you want to hear anything. Otherwise, I hope everybody is doing awesome. And I will see you, or I will talk to you in the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.